The most Googled man in the world, Andrew Tate, has made the switch from YouTube to Rumble, with many others following suit. And after reporting Q3 numbers, it's time to see if us value investors should do the same. The stock has whipsawed back and forth over the last few months as this former SPAC has gained Wall Street's interest. But since earnings were released, the stock has dropped about 20%, despite beating both top and bottom line estimates. So as value investors, we have to ask ourselves whether or not we should be buying into this stock as they look to take market share away from YouTube with their censorship-free platform, and how or if it will impact Google's business going forward if we do see mass adoption. So make sure to stick around to the end of the video because we'll be talking about all that and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. Today we will be doing a full analysis of this business, going in depth through the top and bottom line as well as the balance sheet, cash flows, etc. And finally, to conclude the video, we will end this off with an intrinsic value calculation here to see at what price point we should be buying this stock at. And if you do enjoy this video, make sure to smash that like button and subscribe as it really helps out the channel. And always make sure to comment your video recommendations in the comment box below so we know what stocks and businesses you are most interested. With all that out of the way, let's jump into the analysis. All right, so let's talk a little bit about Rumble's Q3 earnings, and let's start with what the business actually does. So think of Rumble as the adult version of YouTube where almost anything goes, and they say because of that they have a sustainable competitive advantage where they're bringing value to creators, they're building up their technical infrastructure, and that they have about 44 million active monthly users so far, and that number has been growing with over 8.1 billion minutes watched per month and 9,000 hours of videos uploaded each day. And we can really see how over the past few quarters they have been gaining more and more global monthly active users, and with more people being censored, they're all coming to this platform. So we have Russell Brand, Donald Trump, Jorge Masvidal, just to name a few, and obviously Andrew Tate as well. And they also are mentioning right now that they have massive future potential to grow even further. And they also mentioned here that their growth so far is actually similar to that of TikTok's, at least in their early stages here. And as you can see, it actually does measure up quite well. And I mean, if they do actually continue on this path here, Rumble could be the next platform that you really want to invest in, because not only are their monthly active users growing at a substantial rate, but also they're working on that profitability, which we should see the more users that they do actually bring onto the platform. We'll get into that in just a second. First, let's talk about their strong growth in traffic and engagement, okay? Again, massive growth over the last few quarters in terms of people actually using their platform. Same thing with their minutes watched. More and more people are coming over to Rumble and clearly spending time watching their videos. And if we compare this to YouTube, we can see here YouTube has around 224 million active users on a monthly basis, which generates about $5.28 per user. Right now, Rumble is sitting at an average of around 30 million users per month, which is the equivalent of 13% of YouTube's market share in just a relatively short period of time, where many YouTube users actually still are unaware of Rumble. So imagine once we do see a broad adoption of this platform, we can definitely anticipate that this stock will be able to generate more users, take away some market share from platforms like YouTube, which will ultimately drive more profitability for them. Okay, let's look at what actually occurred this quarter. Okay, revenues, they produced about $10 million. Let's call it $11 million worth of revenues, 431% increase from last year this time, as they added on an extra $9 million in revenues. The unfortunate part is that they're not able to reach profitability just yet, and that is because they are spending more to gain more market share. Look at this, increased SG&A by about $2 million. Research and development, they spent another $1.5 million on that, and then $6 million on sales and marketing. You can really see the impact of increasing those expenses, but because of that, they have had a 431% increase in their sales. So again, we are going to have to see how this translates over the next few quarters. This is very new business, and if they really can gain more market share, they will definitely be able to turn their losses into profits. It is just a matter of time, and if people will really adopt their platform. The reason I say this is because if you look here, 7.6 million of their revenues was actually due to an increase in advertising revenue. The rest was due to licensing and other revenues, okay? So the more consumption that they have on their platform, again, the more they'll be able to drive those advertising revenues, which is really going to bring home some more cash on the bottom line. And for this quarter, they were actually able to increase their monthly active users by 97% up to 71 million. Last year, they only had 36 million. So massive growth here, and it's an equivalent of about 31% of YouTube's market share. And we can see it's actually being broadly adopted as more minutes have been watched as well as more uploads. So people are clearly resonating with this platform. And again, we can see the impacts to the fundamentals. And if we take a look at this from an income statement perspective, we can see here, I would say the only thing that this business really needs to sharpen up is their gross profit, especially if they want to compete with the likes of Google and YouTube. if they can actually produce the revenues at lower rates and with higher gross margins, they're really going to be able to profit, as they're left currently with about $3.5 million of gross profits. But then after, once we deduct for our expenses, which we talked about earlier, yeah, we're left with the operating loss. But if we take a look at their balance sheet and their liquidity, we can see they have an influx of cash here from their combination of their businesses. So now they have about $350 million of cash on the balance sheet, absolutely zero debt on the balance sheet. So a strong liquidity position at this current point in time. You would just want to take note of their warrant liabilities here, okay? So seeing as this business is not yet profitable, we are going to have to make some estimations here. They have about $10 million in sales right now and only a $7 million loss from operations. So if we assume that over the next few years, they can actually turn those losses into profits and they can profit, let's just call it about $100 million in operating income, at least over the next decade or so. I think that's very achievable for them. And if we require a 10% return, they do not currently pay a dividend. And if they continue with their massive growth rates, let's just estimate they can grow at 15% for the first 5 years. That stabilizes at about 12% for the 5 to 10 years after that on a 40 PE for growth stocks. Yeah, the stock should be trading at about $50 per share. Right now, we're trading at $10 per share. So that's a 5x from where we are right now. In the very best case scenario, let's assume they can grow at 25%, then 20% for the next 10 years. On a 45 PE, yeah, we'd be at over $100 per share. And then again, in the very worst case scenario where they struggle with profitability for longer, their growth momentum wanes, or maybe even their cost to produce the revenues are just too high and they're not able to achieve that profitability for a while. You know, let's just say this business only grows at 2% for the first 5 years. That stabilizes at 4% for the 5, 10 years after that. On a 30 PE, the stock would still only be worth $14 per share. Now, this is again with our prediction that we would have about $100 million in profits at that point. If we drop this down to something that's much more attainable for them, at least over the next few years, with only $10 million in earnings, we can see how this translates for the stock. Now, in an average case scenario, let's assume they can grow $10 million of earnings at a much higher rate. Let's say they can grow that at 30% for the first 5 years. That stabilizes at 20% on a 40 PE. Yeah, the stock should be fairly valued right now for a 10% return. Now, in the very best case scenario, where again, we're seeing massive growth from this stock, 50% for the first few years, then that drops down to about 30% for the 5-10 years after that as we take on more market share from YouTube and such. The stock will be trading at about $40 per share, so still a 4x from there in the best case scenario. And then we'll just leave it as it is for the worst case scenario. Again, we can really see, at least since September, how this stock has performed, where from August to September, we had a 66% increase in the stock. But then since mid-September, we've seen a 55% decline in the stock price, which has ultimately seen a 90% increase from those levels. So we are seeing that whipsaw action that we mentioned earlier in the video. And clearly, as we saw from that rebound from those October lows, there are some buyers in this stock, especially in and around that $7 per share figure. So we might be fairly valued, especially in and around that price level. Right now, we're trading only at $10, so not too far off those levels. But that's my analysis for this video. Let me know your thoughts in the comment section below. If you think this business will be able to take market share away from YouTube, if people will actually start to broadly adopt this platform as their platform of choice. And also let me know if you personally are making the switch to Rumble. But with all that being said, thank you for watching. If you've enjoyed it to this point, like, subscribe, make sure to comment your thoughts in the comment section below, and I'll catch you on the next one.